The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show by looking at the DAX like we usually do. As you can see, it was forming that pattern yesterday, and it's had one heck of a rally here. Actually, it was a couple days ago, but it's continued up now. You see it has a pretty good rally. But the interesting one today, by the way, we're going to have Stan Harley as our guest today at 9:30. That is always interesting. He's one of the Timer Digest winners, so we'll take a look at that. But if we look at this FTSE index, this is very interesting, folks, because you'll notice that ABCD pattern that we've completed up here. In fact, there were two of them up there, one going back to April, and the other one going all the way back into September. But what we want to watch is the fact that it's been here for 5 days and hasn't busted through. So it's going to be interesting if this is going to be, a major top at this point or not. But it certainly, completed the pattern, but nothing has happened. Folks, given the fact that what's going on in the world, I have, when you realize that we now have marijuana being traded on the New York Stock Exchange through these ETFs, I posted something here in the den today from our good friend Rich Anderson about what's going on with this ETF, and it's the volume has exploded 13 times in just 5 trading days. So maybe it's going to be like Bitcoin. Who knows? The one thing I will say this is that when I saw that thing on New Year's Eve from CNN when they were on the, I don't even know what they called that bus, the Canada bus, it was really sad to see that. I mean, I understand people have the right to do what they want, but actually, it's not good for children. That's just my opinion. And I'm off my soapbox, and we'll get back to the markets. Okay. All right. Let's take a look at a couple markets that look really, really interesting. This is one that I think has a very good possibility here. This is the chart of Priceline. We used to have old Priceline Charlie coming in here for many, many years, but I don't know what's happened to him. Either his computer's been damaged by the Intel chip, or we'll see what happens. By the way, the Intel chip has some really bad problems, folks. My good friend Byron Tucker is flying out to Arizona today, and he was stopped through TSA with his computer because it showed signs of an explosive device. And of course, they immediately traced it back to the bad Intel chip that's in there. So there's some real problems with this Intel thing. So, just really a little scary. So when they stop somebody like Byron for flying, that's really, really, really serious. So we'll see. All right, folks, we've been waiting for something to happen here in the gold market, and I don't know if this is it or not, but let's take a quick look at it here this morning. This is what we were looking at as of yesterday in the gold. Remember that area 1315, 1316, 1323 was a 61% retracement on the daily. But look at the swings we've had in gold just since January the 2nd. So we're 3 days into this, and you see the market came down to this morning's low right when the jobs report came out. Came in at the 1310, which was a perfect 61% retracement from yesterday's low at 1307, and we've rallied up, to the 1318 already, which is the 61% retracement from the January 2nd high. This tells us that if we get above 1324, this $16 break, which is only $1 away from the harmonic number, of course, of 17 in gold, will tell us that this gold is getting ready to rocket. I don't think that's going to happen because usually after you get that many days in a row up, you get a little bit more of a pullback. And my assumption is I think the area that I'm looking at is around right around 1290 which would be a 38% retracement in the gold. And I'd like to see that. This is Thursday, Friday. I'd like to see that around Monday. That would be about 3 days down. So that would be pretty good. By the way, realize that on the 15th of January, we have a national holiday. That's Martin Luther King Day. So the markets will be closed. Of course, they'll be open overnight, of course, because the rest of the world does not celebrate that holiday. So the other markets, will be we will be trading at that time, so it will be very, very important to watch anyway. Now, another market that is really interesting that Tom O'Brien talked about, since we were talking about marijuana, we might as well talk about Bitcoin. That's the next one that's in the news. But you'll see this patterns that we've been seeing in Bitcoin continue on just about perfectly. You'll notice now that we got up to 15,500. That's our third high, blah 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 blah. Just a minute. Bam bam bam. Judge is ruling. Anyway, we're going to be looking at our possible third lower high now at this level. So if we fail from this level, we're still going to be looking at that really long-term ABCD pattern that takes us down. If you look at the very, very far right of the chart, at the very far right, you'll see it comes down at around 8,500. That's the big ABCD that started back on the 18th of December. But any move that we can get above 17,000 tells us that we could be looking at a $20,000 handle. Folks, each day that it goes through this process of going through these patterns reduces the possibility that this is a bubble, because when bubbles go up, they come down just like they go up, and because all the air is let out of the tires. So this is beginning to look a lot like Christmas, as they say, because it's holding up to all these patterns just beautiful, and it should, because you've got a lot of people trading it. It's been reported that the volume on the Bitcoin and the cryptocurrencies is greater now than the volume on the New York Stock Exchange. I don't know if that's true or not, and I would think it would be hard to prove, because some of these crypto exchanges are still doggone small, but they're doing a lot of volume supposedly. I don't know, but that's I'm just reading to you what people send to me as far as potential things to look at. So that's the main thing to keep in mind, that this is still the wild, wild west, and we'll see how this goes. I believe John Jameson will be coming out with his newsletter on the Jameson letter, which will be about the cryptocurrencies and blockchains. Will be coming out right around the 15th of the month, as I recall. So we'll be able to take a look at it. The markets are, again, very, very strong. They were already strong before we had the jobs number, which was very strong, and that pushed the market, of course, even a lot higher. Now, there's a lot of things going on in the news about the crude oil market, folks. I do want to show you this, because I've been waiting to see some type of divergence in these markets, and we're starting to see it this morning. If you look at the heating oil, you'll notice that it did not take out the highs from the second, whereas we made new highs in the West Texas Intermediate, but not in the heating oil, and it's the weaker of the pack, and it had been the leader, so that could be important. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I'm going to talk a little bit here about the cocoa market. That's something that I don't trade, but gosh, it's got a beautiful pattern, and it's certainly tradable because it's electronically traded. It's not family traded like it used to be, because it used to be run by the basically the Hershey family and the Mars family, but now it's totally a lot different. But I want to put the chart here of the long-term monthly chart here on cocoa going back to 2004, and you're going to see a absolutely beautiful pattern here that completed back in 2017, where we made a 1.27, a 78.6 level, and a 61% level. And as you can see, this has been in a really bad bear market since 2011. So it's very important that we could be looking at a really important bottom. I think we have a caller in this morning. John from Philadelphia, are you there, my friend?
Hey, Larry, thank you so much.
I hope you have your scarf on.
I had to call in. You graciously completed the chart work on that cocoa market that I called in about last week. So I'm all ears. Continue.
Okay, how's the weather? Are you warm back in Philly? I understand the schools are closed because of the blizzard, so that's not a good thing.
A nice coastal storm is making it very white here in southeastern Pennsylvania. Yes.
Okay, let's take a look at the weekly chart. We looked at the monthly chart on cocoa, and if you look at the weekly, just to verify the patterns, we had a really beautiful 135 pattern way back in August of 2016, and we've been coming down for, another year and a half. But what's interesting now, John, is a chart that we had talked about just last week when we were on for a potential bottom to form in here. And I just wanted to bring this to your attention because we were talking about it on the air last week. But after we had this rally here, this 5-day rally, to be looking for a pullback. And we had a pretty strong down day yesterday. And I understand we got down to the 1830 level again this morning. I don't know where it's trading right now, but that completes the pullback of this corrected pattern. So the risk here is very, very small. Your risk is just below 1,800, and I believe that's just a few $100s in cocoa, isn't it?
Yes, it is. It's let's see, that is $1,840 per ton. I believe the contract is 10 tons. So yeah, let's see, every 100 points, 1,800 and 1,900 is $1,000 on that contract. So yeah, so no, it's what attracted this to me, Larry, is the pattern on that monthly. My info flow on the fundamentals of supply situation is, of course, poor since this product has grown over in Africa and Southeast Asia. And it was TFNN radio host Andy Hecht who has documented for us over the years how intelligence on crop size truly is in the hands of just a few large operators, and they're not us, and they're not telling us what they see. So I'm probing as a speculator for a completion of a 7-year bear market, but it's only probing. There's no bottom proven, of course, at this moment.
That's true, but this is the ideal situation for patterns, though, John. It really is. And I understand about the the information. I had one of my very, very dearest friends who passed away in '95, Jay Cross, who introduced me to Amos Hostetter, had a big ranch up in Elko, Nevada, and we were there for a big Thanksgiving party way back in 74, 75. And there were some members of the CIA and the FBI were invited because Jay was best friends with Trent Lott, the Speaker of the House, so he knew a lot of these folks. And the guy was a little slosh, the guy from the CIA, and they were talking about commodities, and he made the comment. He said, if you think we can't know what's going on with the cocoa crop, he says, you're being very naive. He says, we can read the warning sign on a package of cigarettes from 7 miles up. He said, so we know what's happening.
And the scary, well, it's not scary, but the truth of the matter is what you're sharing with us is truth of the matter 20 years ago.
It's 40. That was 40 years ago, John.
I'm sorry?
That was 40 years ago.
Well, okay. Yeah. Well, think of the evolution and deployment of advanced technology. Think about what is capable today. Yes, it's eye-opening, certainly.
Yeah. Well, these drones, I imagine, the fact is, Sim Only has told me that they have, companies now that can go into the soybean fields and corn fields with drones into the middle of the fields where they can't, the rows are out there. They just don't look at the outside rows. They go into the middle of the crops, to see what's happening, and then go right down and, basically look at the kernel of corn face to face. So, we're getting great information. But as you mentioned earlier, we don't have access to that information. So what we do have is we have the access to that bar chart. And if prices are going up, there's going to be more buyers. And if prices are going down, there's going to be more sellers. That's pretty much the bottom line. So, that's really all you have to worry about, in my opinion. So we'll see if that's going to be true. But I think it's got a chance here. The cocoa really, where's it trading in it now, John? I haven't checked it this morning.
It was 1840 10 minutes ago, so it's down.
It's still down in this area.
Last week's lows.
Yeah, like they say. Yep. Go ahead.
I'm sorry. I apologize. I know you have a guest on in 10 minutes. I wanted to wrap our conversation, my talk with you, by asking you the question on the S&P or the E-mini S&P futures, currently up at that 2719 level. Is there anything in your Fibonacci expansion work that gives us a likely target for this rally into new highs?
All I know is that there's this 1.618 expansion at 2718, and I think we're 2719 now. So, 2 or 3 points above that has broken. But that's the only thing that I can see. The Russell looked like it had a chance because of the lower highs, but it's strong again today. So, I just don't see a pattern here other than that 1.618 expansion. Now, the fact that, that it's up here. I mean, it could go a lot higher. It's broken everything on the way up. So there's so many easier things to trade. I mean, the euro, the gold, the crude oil, soybeans. Look at the nice move we've had in soybeans. So I'm just going to let those boys fall asleep over there and get back to trading the cannabis. You're right. You know that is actually, cannabis was actually a Mexican product made out of rope many years ago. Did you know that, John? Because it was real popular here. It was real popular here in Tucson. The cowboys would use that, and then later on they found out that the cowboys were smoking the rope. I guess, I don't know, but I'll tell you, when you stop and see things like what's happening on the stock exchange with marijuana, I don't know. That's a little scary from this old cowboy's standpoint, anyway.
Thank you so much for your help on that.
Hey, you bet, buddy, and stay warm, my friend.
Sometime today, show that or post in Tiger TV that E-mini chart with that fib 1618. Thanks so much.
I'll do my best. Yeah, thanks a lot. Mr. Z from Philly. We'll be right back with Stan Harley of the Harley Stock Market Letter.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I believe we have Stan Harley of the Harley Stock Market Letter. Stan, are you on the line?
Good morning, Larry. I sure am.
Good morning. Happy New Year to you, my friend. I was thinking of you real early this morning when my good friend Rich Anderson sent me an article about the fact that they're trading marijuana now through an ETF on the stock exchange, and it's the volume has jumped 13-fold in 5 trading days. And I remember our days back in Westlake Village where I lived. That area around Moore Park used to be an area where there was a lot of marijuana grown, and the sheriffs would be out there all the time raiding it. This was going back into the late 60s and 70s. But now it's all housing up there, isn't it? There's just nothing but subdivisions, correct?
Pretty much all housing, yes, indeed.
Yeah,
Yes.
yeah. Well, that's good. Anyway, listen, thanks for joining us today. We really appreciate it. We start out here with the SPX, the S&P 500, and take a look at this pattern of cycle highs you're looking at. You want to explain to us what you're watching here?
Yes, Larry. We've had quite a run here, as you know, and a lot of folks may think we've never seen this before, but in fact, we have. We've seen a very similar run in your and my recent past. Recall back 1994. Oh, that was 20 some odd years ago.
That's the Greenspan years, you bet.
That year, the market went sideways for pretty much the entire year. And then it hit sort of the apex of that sideways structure in December. And then it went straight up, 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 up. 1995, it just went up every day. And I remember watching Channel 22 in Los Angeles, as you did.
Oh, yeah.
And
absolutely,
everybody was just astounded at the strength of the market day after day after day. And it finally reached a high in February of 1996. It went up virtually straight up for a total of 295 trading days, from December 13th, 1994 into February 13th, 1996. And then from that point, it began the first serious correction. We are, Larry, I think history is repeating here. I mean, market technicians are fond of saying history doesn't exactly repeat, but it rhymes. But if you take the November 4th, 2016 low, and you add a similar time count at 295 trading days, it equates to January 9th, 2018.
Wow.
Which is coming up here real soon. So if history were to repeat within a few days, then we should be looking at a high here in about a week, maybe a week and a half at most. And so what I'm doing is looking for some technical signs that would tend to corroborate that. And here's one chart pattern that indeed is very, very compelling for just that thing.
Did we lose Stan?
Highs during about every 110 trading days.
Okay, we have a question. Do you have a name for these different moves that you have? Do you have a particular pattern name that you have?
I don't give it a name, but I do see that every 110 plus or minus about 3 trading days, we tend to make highs. 110, of course, is the product of 2 times the Fibonacci number 55. And I've analyzed that, and it does indeed point to a high here coming in about a week, should the pattern continue.
That's for sure. And, January 8th or January 9th is very important. I hope you know the reason. Because it's, it's one day after Elvis's birthday.
Well, there you go.
I have to bring that up because I'm a big Elvis fan anyway. I never forget that. So, do you want to go on to the next chart, Stan?
Another chart, another interesting pattern developing here, also suggestive of a high in about the next week and a half. If we look at the highs and lows going back over the last year, look at the March 1st high of last year, the August 8th, and the November 7th. Those are contracting by a 0.618 Fibonacci ratio. And if the pattern were to continue, that again points to a high coming in around about the 10th of January time period. As a technician, that makes me pause to reflect. If we look at the pattern of lows, also March 27th, August 15th, August 21st, November 15th, those two are contracting by a similar 0.618 Fibonacci ratio, and that too clusters in the next week or so. So you put it all together, and the ingredients are developing here from a technical perspective of a high forming in about a week to a week and a half, Larry. Something I'm watching very, very closely.
Well, that is incredible harmony when you look at that. I mean, that's exactly what we look for. And then we're coming into, you believe January 9th. I believe that'll be a Tuesday, isn't it? Yeah, that's next Tuesday. So that'll be very, very interesting. And of course, we have a new moon a week later than that. But boy, there's a lot of aspects due. I'm just checking my astro calendar now. Holy cow. That's going to be a really big date. Folks, we've got a whole lot of things happening. I'll have to have Norm Winsky on that day because, boy, I'm just looking in 3 major conjunctions on that day. So, boy, that day's a spot-on astro day for sure. That looks very interesting.
I don't want to try to focus too much on the precise date, but I'm saying the time period between the 9th of January and it could extend as far as the 17th. That time period, I think, is ripe for a high. The 110 trading day pattern that I pointed out, the 0.618 Fibonacci contraction on the highs and lows, and then also the 295 trading day count from the November bottom of last year, which lines up exactly with the 94 low to the early 96 high. Put all those things together, Larry, and I think we're looking at a potential high here in about a week to a week and a half. Very, very compelling indeed.
Well, even if you're wrong by a few days, we're still going to have you on again, Stan, because the calls you've given us have been absolutely fantastic, and you've not really been looking for a top for quite a while. So this is the first time you've given us some indication that something big is happening. Stan, someone's asked a question: is the source of your data? Where do you get your data to do to do your charts? What data service do you use?
I just use freestockcharts.com or stockcharts.com, both of those data vendors for my charts and for my data. It's and also use Yahoo, all 3. It's all free stuff off the internet, and I download everything into spreadsheet to do my analysis.
Mm-hmm. I've checked the data on that. In fact, Jim Twentyman, does the checking for me. And you're right. These free services, they get the data from the regular people that charge a lot of money, and it is spot on. I mean, it's not like years ago. Remember, we back at the days at Conti, we didn't even have intraday charts. We had that big machine there that printed out a chart, but it cost $15 to print out a 5-minute chart. So it was not an easy thing to do. But now we've got this technical stuff that everything's electronic and you can see it just as clear as a bell.
You sound like a Quotron guy or a CompuServe.
Oh, well, I had Quotron. In fact, one of the biggest jokes on the Quotron was on the lower right-hand side of the thing with all the symbols. It would say TIME. And when anybody would come in, I'd tell them, I'm long this, TIM when it was going up, and after 1 o'clock, I'd be short. Anyway, we'll be right back with Stan Harley from the Harley Stock Market Cycles.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we're talking with Stan Harley. Stan, we were talking about data and stuff. I remember from the old Conti office, we had that big Bunko Ramo board at the head of the room there that covered the whole wall. Well, when they, when Conti finally sold the commodity department, one of the traders actually bought a large piece of that Bunko Ramo wall and made it into a wall in his den, and it actually worked. It had the red and green yellow lights and the clicking, whenever things went up and down, it made that very loud sign. And when it made new highs, it would be a green light. When it made new lows, it was a red light. It was unchanged. It flashed yellow. He had that thing working for many, many years. And when he passed away, that was one of the things that went the fastest in the estate was that particular piece of memorabilia. Anyway, that's neither here nor there. Stan, did you ever trade off a ticker tape?
Well, when you and I lived back in California, I used to keep Channel 22 there in Los Angeles.
Sure.
On my TV all the time. And yes, I would watch the ticker tape scroll by, and before the days of computers, that's what I used.
Yeah, Gene Morgan charting the market.
Oh yes, Gene Morgan.
Yeah.
Yes, indeed.
That's one of the things that was very fun for me is because when we had Bill Griffith and Sue Herrera and Ron Ansana there, I would be on the show occasionally, and it was always fun to go down there and be on TV for a while. But those were the old days. Stan, we're taking a look at this next chart that you have, which is a New York Stock Exchange high-low differential. You want to tell the folks what you're looking at here?
Yes, Larry. In addition to price, I look at what I call market internals, and they kind of give me the opportunity to take a peek beneath the hood, as I like to say. Mm-hmm. Market internals would be advances and declines, new highs and new lows. In this particular chart, what I've done is I've looked at the pattern of new highs and new lows, and I just keep a 10-day and 30-day simple moving average of the net difference between each day's new highs and new lows, as reported on the New York Stock Exchange, and I plot it on the graph. It goes up and down above the zero line, and it gives us a pretty good sense of when the market is overbought and when it's oversold. Mm-hmm. And right now, both the 10-day and the 30-day components are rising. So that's suggestive to me that a high is not yet in place. What typically happens, Larry, is when we get to some kind of high, or just in advance of some kind of a high, the 10-day tends to flatten out and get close to the 30-day, and sometimes there's some kind of divergence. But the structure starts deteriorating, and that warns us that a high is coming. That is, the pattern of new highs is lessening, the pattern of new lows is increasing, and that structure flattens out and starts rolling over, and it gives us some type of indication that a high is about to form. And we don't have that in place yet, but in about a week and a half, let's see if we do. If we do, and some of these other things we talked about a little earlier, this 110-day pattern of new highs, the 0.618 contraction that we talked about. When all that comes together, you and I as a market technician say, okay, the ingredients are there from a technical perspective to perhaps fade this market. But let's wait and see how this thing develops. Those are some of the things I'm looking at, Larry.
I really am interested in that particular chart because it shows, really what the distribution is that's going on in the market, doesn't it?
Absolutely, yes.
Yeah,
and it's real simple for anyone to construct. They can get the data for free off the internet, dump it into a spreadsheet and plot it for themselves. It's just a simple 10-day and 30-day moving average of the net difference between advances and declines, and it tells us a lot about what's going on inside the market.
Now, as I recall, you don't do single stocks. I mean, you don't look at each like Disney or anything like that, or Amazon or anything like that. You basically do the broad market. Is that correct?
My focus is the broad market, but I will point something out here that folks might want to take a look at. Take a look at the pattern of General Electric, and that's a Dow component. I've gone back and looked at that pattern many years, and what I find is significant lows in the pattern of GE coincide with watch-out lows for the broad market. And one will note that GE has been coming down here seriously.
Oh, yes.
It's warning that this rally may be running out of steam here very shortly and due for some kind of pancake to the downside. I've analyzed the pattern in GE very closely, and it points to a significant low occurring in early February. So what I'm thinking is that low in GE is going to coincide with some kind of pancake low in the broad market. I think we're getting up here. We're poking our head around 25K on the Dow. I think that's going to be significant resistance. That's a major, what I call an octave level. So I don't think we're going to get extended much beyond 25K on the Dow. And then some of these other technical things that are coming together here in the next few days suggest to me, Larry, that a high is very close, and we're going to get a short but perhaps sharp pullback. And a low in GE might very well coincide with some kind of a washout low in the broad market.
Yeah, it's really amazing about GE because GE is the only original component of the original Dow Jones. That's the only stock that is left out of the original 30. All of them have either gone by the wayside or have been merged together. And American Telephone went bankrupt twice during that 100-year period. So these things do change. But General Motors is the only one that is the original of the original Dow stocks. So that's what I read anyway. You can't believe everything you read anymore, but that's neither here nor there. Stan, the next chart I'd like to go through is very interesting to me. That is this Case-Shiller index that you're showing, because it's a lot of technical things here that look really interesting here.
Larry, I've looked at the pattern in home prices extensively back into the 1800s, and there is a number that shows up both on the yearly charts as well as on the monthly charts, and that's the number 64.4. And there's some Fibonacci backing of that, but long story short, there's a 64-year pattern in home price cycles. There is a 64.4 month pattern in home price cycles. The high we had in 2006, and you would just go back in time, there was another high prior to that in June of 1990. That is 3 times 64.4 in terms of months. The pattern projects if we go another 3 times 64.4, that suggests a major high in home prices in November 2022.
Wow.
So looking at the highs and lows, the evidence is from a technical perspective very compelling for this 64.4 month cycle. And I think we are in zone now for a potential high in home prices. The national index is just broken out to a new high. The Los Angeles index, which is the one that I've got there posted for the charts, is right at the September of 2006 high. So I think we could hesitate here for a little bit, for a few months, but ultimately I see home prices grinding their way higher into the November 2022 time period, and that is going to mark, Larry, not only a major top in home prices, but I see a major peak in equities and bond
Hey,
prices.
listen, Stan, thanks for joining us, buddy. We'll have you on again soon, and we'll be watching that date of January 9th, and may God bless and Happy New Year to you and your wife.
Thank you.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we passed 25,000 in the Dow, like melted butter. What was the name of that guy many years ago that used to be, was it Bucky Dent that was talking about 25,000 in the Dow when it was trading at around 11 or 12 or something like that? I remember Ralph Acampura talking about 10,000 in the Dow when it was trading at around 6,500. And I actually know Ralph very well, and he was working for a broker, and his boss, who owned the brokerage company, when it hit $10,000, he gave him a brand new, well, it was a 1962 Corvette convertible with the license plate 10K. And so it was very interesting. And Ralph kept the car for a while. He never drove it very much, and he finally sold it and put 2 of his kids through college. So it was very interesting. Anyway, I don't know how high we're going to go, but we're going to go higher. We're keeping an eye on all these different things. I probably won't be looking at any cannabis stocks for a while. I'm certainly against that kind of stuff, but that's just my personal opinion. Watch the crude oil here, folks. There's a chance that we've hit a major top in here, mainly looking at the heating oil because of the divergence that we have, and in that long-term pattern matches the old high from 2 years ago. Didn't go anywhere. That was another reason why it should have broken out really quickly above $62 a barrel. It might still, but we haven't done it yet. We've got this tremendously bullish news coming out of Iran. And also, we've got the main thing of looking at, the cold weather that we have everywhere, and that's supposed to last for another week with, minus zero in most of the Midwest, and in the far north you get it's it's dangerously, deathly cold that way. So we'll watch this very closely. Now tomorrow we're going to have our good friend Bill Meridian from Cycles Research out of Vienna, Austria, who always has some great stuff, and we enjoyed having Stan Harley on today. You can reach him through the Harley Stock Market Letter, www.harley Stock Market Letter, 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!